Hey guys, it's 12:20 on Wednesday. Just wanted to check in with you live during while the market's trading, so you can see exactly what we're doing and where we're at. Up in front of you is this is the daily chart of corn. This is a 240-minute chart. This is a 60-minute chart, so you can see a little bit of a more granular setup and view. And then over here we have new crop soybeans on this chart. Let's just kind of look through it real quick objectively, right? Like, so where are we at on corn? Well, we're sitting right on top of our daily cloud. We're right between this. We're right in the middle of this corrective price channel, and we're sitting below the 692 level, which is this blue dotted line right here. What does this tell us? What is it? What do we think it means? We think that this is still the good resistance point that we want to trade against. I think that yesterday was just a little bit of counter trend stuff, and we could very well roll over from here. If you look at it from a little bit more granular look on the 240-minute chart, you see corn reversed right at the 61.8% retracement of the move from the top to the bottom, right, on the daily chart. This is the top, this is the bottom, reversed right at 61.8%, which would be common for a wave 2 position. And if we can get it to roll over, then it should be in process to go make new lows. It could need to come up just a little bit higher and test this one more time in order to complete this little sequence down here, but it doesn't have to do that. It can just go ahead and roll over too. So corn overall, we're still looking lower. We're bearish and think that even a rally from here needs to be sold so long as it stays under this 692 level and inside this corrective channel. If it starts to poke up out of that and gets up into this range, then I think we need to take a harder look and see exactly what we have going on. But fundamentally, I just don't see it. You've got crops getting bigger in South America, not smaller. You have weather turning more favorable, not worse. And we have ethanol stocks growing here in the U.S., not shrinking. And yes, we have strong basis levels, we have strong spreads, we have all those things in the nearby are true, and we are tight in the nearby. So that might provide some buying support. But if the market rolls over and ignores those bullish fundamentals, which it has so far, then I think that leans itself to be even more bearish. Now let me pull up the soybean chart here, so you can look at what might really help corn roll over. Here's your new crop beans, obviously below our cloud, below below everything, and in a downtrend, right? There's a little 1, here's a 2, here's 3. Now we might be making a little 4, or we could just be pausing before we just take it on lower. I see no reason to look anywhere but down in beans, particularly the new crop, given the size of what's happening in South America. And then old crop beans showing quite a bit of strength today off of our lows. We're trading 16 cents or so off our low from this morning, which it really looked like this was just going to roll on over. I don't think too much about that, as we're still just below. We broke all of this all of this support, and now we're testing the bottom side of it. And look at yesterday's day. So let me zoom in here just a little bit so you can see it a little bit more clearly. So yesterday we had a bearish engulfing shadow, and today we've come up and tested about halfway through it. That's all that's done. I would expect this to go on ahead and roll over. When this thing really gets going, it's going to break this 1460, 65, 62 level right in here. This is what the trade is really looking at, which is going to coincide with this uptrend line, which is also going to coincide with the breaking of the daily cloud as well. So all those things start to materialize, and we end up needing to go much lower. And to negate all that, we really need to trade back up into this 1515, 1525 area, somewhere up in here. And even then, it doesn't really negate it until that is all the way gone. So beans have a lot of homework to do before they can change our mind for sure about where we're heading. So soy meal is what everybody's talking about. The funds are record long this market, and so I don't think that they're in trouble yet. but at some point, if it breaks lower, they're going to get nervous. I'm guessing this 443 level, which is this low back here, is what's going to start making them rethink their position. But for today, we've got just a lot of volatility and two-sided trade against that long position that's in the marketplace. So beans are getting banged around by meal, and once this thing rolls over, if it does, then I think Katie bar the door for soybeans because there's plenty of them. Okay, so let's look at wheat. Wheat has it's just been beaten up like crazy. You have this nice bullish divergence down here, which coincides with a 5 and a red 13. The 13 is what they call a buy setup, and so that would imply that the low is in here for a little while on wheat, but it's just not getting any strength or exuberance. So we really need to see wheat move above the 850 to 867 level on the March Kansas City contract and get above this downtrend line before there's going to be much excitement about buying it. Otherwise, the funds are short this market. They're going to stay short because there's nothing fundamentally really that would cause it to rally harder. If the corn crop is getting bigger and the moisture profile's improving, we have the acreage, and if we grow that crop and it really does turn into something, then wheat is going to have way more supply than we need to fill demand. And you look forward, and everyone's saying, well, China is reopening, and that's going to reopen corn demand and oil demand and wheat demand. And I just don't know that that's the case. I mean, what don't we know about China already, and what's not already baked into this market, right? They certainly aren't behaving and acting like a country that is behind on food purchases and needs to catch up. So I think the pressure is going to stay on the downside. And if beans roll over, roll with me here. If beans roll over and take out the bottom of their daily cloud, corn can't withstand that, and it's already trying to roll over. So beans and corn roll over. What is going to hold wheat up anymore? I mean, we could go a lot lower here, guys. You could go to 6, you could go to 550 on wheat. It hasn't been that long ago since we traded it, and so don't get shy about getting wheat sales on here, because you can always retrade it with options later on. But for now, the risk is lower, not up. Okay, so that is 8 minutes. Wanted to do this live while the market's trading. Not a whole lot of new fundamental news that's out there. Otherwise, we'd plow through that for you as well. And when something does materialize or develop, we'll be quick to tell you. But for now, I think the market's just digesting information and trying to work itself lower. There's always two sides to every story. So clearly, people are finding value where others are willing to sell. That's why you're getting this type of action. But our view, this thing needs to be sold, and needs to be sold rather soon. Otherwise, you're going to have to catch it down here at much lower levels if you're not careful. All right, there is risk in trading futures and options, and you should only do so in light of your own financial condition. Everything I'm talking about in here is our opinion and our analysis on what the market does and might do in the future. Obviously, it can do whatever it wants. So if you have questions, please talk to us. We're happy to help you come up with positions or strategies that will help you protect your downside and keep your upside open if that's where you want to be as well. Have a great day. We will talk to you next week.